Hey, and welcome to the Intelligent Investment Show for January 30th, 2026. Matt Dahl, I'm Garrett Lale. Good to see you, man. Missed you last week, and sounds like you feel a little bit under the weather, you said. So we'll fight through it, man. We just like this market. Got to fight through it a little bit this week.
Yeah, I feel like the market, I'm just yo-yoing up and down all week. I feel better. Yesterday, I felt great. Today, I don't feel so good. Day before that, I felt, not so great. So it is what it is. I guess I'm feeling like the market right now, up and down. I'm not sure.
If you only looked at the stock market from the last time we talked, if it were just a straight line from that point to this point, you would say, well, it's been pretty quiet. Last time we talked, we were at 69.40. As of right now, we're at 69.12 at 12:08 Eastern time. So it doesn't look like it's moved that much, but it has. It was down pretty sharp on the 19th, 20th. Got down to as low as 67.96 on the 20th intraday and snapped back a little bit. Got back to right at the all-time high. I don't think we quite set a new high, but we got right on it. And then we're down just a little bit today, back down to 69.12 or so. So, like you said, a little bit of a yo-yo. What's been going on?
Wednesday, we hit 7,001. And
You're
what we
correct.
have here
Yep.
is earnings season. We're in the middle of earnings season, right? And if you look at Tesla, Apple, Microsoft, Meta, all of them have had really strong earnings. Okay. Now, again, it's hard to, you don't want to, you don't, unless there's a massive miss or just an incredible beat that was not expected. Earnings are backward looking, right? Earnings are backward looking. They're not going to give you any guidance. It's the guidance and what they're going to spend on future projects, kind of let you know. But what I've been a little surprised about is, look at Apple and Microsoft both beat earnings by about 6%, but it just appears that Microsoft is getting its lunch taken away from the table just because of all of the, they're not keeping up on AI, and they've been kind of beat to the punch. And there's a big software component to Microsoft that they think is going to have a problem. You're seeing software is absolutely deteriorated against equal weight tech to the lowest level since 2008. And I think Microsoft is getting somewhat caught up in that trade. So I think Microsoft will come around because they have a big enough war chest and they have enough name brand recognition and they have enough good people there to come through this, and it will be fine. We're gonna have to walk through the desert with it for probably the next 3 to 5 months, and it should recover just fine. Apple had an incredible, I talked about staggering demand out of China. It beat top line earnings by 6%. It gave incredible guidance, and it's down 2% today.
Mm.
So you have a market that has done well. We're trading, here we are again at 22 times earnings, 22 and a half times earnings. There's just no room for error. And as long as the earnings are holding up and the guidance of those earnings is strong enough, we'll, we'll be okay. But we're not necessarily seeing the guidance that we're hoping for. And I think PPI didn't help at all today. Core month over month came in at 0.7, which was really, really hot. I think that's attributable to metals. We have gold's run up and some of the raw materials, copper's run up, which is a big deal. Certain aspects of financial services have become more expensive. In fact, if you look at core inflation right now, 36 base. In fact, Stephen Mirren just talked about it. Core inflation, financial services, portfolio management, which is what we do, is attributed to 36 basis points of that inflation number, just because the markets are higher. Okay. So it's not real inflation, but nonetheless, yields are up. And I think what's causing the market a little bit of indigestion right now is that debate it's having between yields and the earnings multiple and the guidance. So if we had better if we had better inflation numbers today on the PPI side and we had yields, closer to 4 than 4.25, I don't know that we'd be having this sort of market indigestion today, and Wednesday. But yeah, like you said, if you go back 2 weeks ago, it looks like we haven't gone anywhere, right? Just a
Right.
nice little trip around the block, but we haven't gone anywhere. But it's not. We burned a lot of calories to get to exactly the same place. We come right back down, then we're right back up, and here we are.
Yeah. It's like running on a treadmill. You burn a lot of calories, but you haven't gone anywhere.
Right.
Semi big news today. Trump nominated Kevin Warsh as the new Fed chair to replace Jay Powell, your boy. So what does that mean, or does it mean anything? We kind of obviously knew this was coming. Was this any news at all to the markets?
Yeah, I welcome it. I think the market's going to welcome it. I think a lot of the economists are going to welcome it. Kevin Warsh is an economist, and not that Jay Powell wasn't a very smart individual and very good at communicating, but he's not an economist. He's an attorney, and he's an attorney with a finance background from the Carlyle Group, which is fine. But Kevin Warsh is an economist who has been critical of the Fed, who's been critical of their slow being late to the game on both sides, right? So it's going to be a little tricky. Now he has to get in there as the chairman, as the chief, as the communicator in chief of the Federal Reserve, to then convince the other members of the Fed to come along with him, right? So I would say Christopher Waller was probably the safest choice because he's already a sitting governor. Okay, but then I would say, but he was sort of the second safest choice. Then of course Kevin Hassett, and then Rick Reeder. My black sheep was Rick Reeder. I was really hoping for like a solid bond guy because the Fed can only control certain aspects of the short end of the curve, right? Okay, and a guy like Rick Reeder, who is in charge of fixed income for BlackRock, he can look at what the fixed income market's doing, what it's saying, and he can take a lot. I believe he would have taken signal from the bond market and listen to what they had to say, not necessarily through conferences and discussions, but where's the bond market at? Let's go to 2021. The bond market, the 2-year was shooting through the roof, and the Federal Reserve was sitting on their hands. So, a guy like Rick Reeder would have said, "Hey, what's going on? Clearly inflation's rising. Clearly the bond market's telling us we need to start moving in this direction," but they didn't do it. So, but it didn't happen. So I guess it's immaterial. But I think Kevin Warsh, being that he's an economist, I think will have a lot more. I think he'll be a lot quicker to the punch than Jay Powell was. But I welcome it.
Yeah. It would have been interesting to see somebody come in there who actually takes note to cheat off of the smart bond nerd that we've talked about a lot of times, the bond nerd versus the party equity guy in college.
Right.
It would have been good to know, or it would have been interesting to see somebody who come in who knew to cheat off the bond market's paper, I guess. Well, Matt, I won't keep you too long today. I know you're ready to get to the weekend so you can recover a little bit and hopefully feel better. And I do wish you healing and feeling better very soon. I don't know if that's healing. I guess healing. Is that the right thing to say when you're sick? Yeah.
Sure.
We'll call it that.
Recovery. I mean, recovery. That seems like we're overdoing
Recovery. There you go. I think that's probably better than healing, but whatever the case, I hope you get better. How's that? Let's just,
I just think I need like some tea, a pillow, and I need to binge watch Landman or something, and I'll be fine.
I binged the first whichever ones are on Prime. I binged that for like one weekend, and I got through episode 4 and I couldn't get to any more. I was like, oh man, I got to pay for the subscription to see the rest of them. But that's a great show. It's
a great show.
Billy Bob Thornton is just an absolute treasure.
Yes.
Well, for listeners, viewers, if you would like to reach out to Matt and his team, you can give them a call at 702-655-8300 or visit intelligentinvestment.com. If you call today, you're probably not going to get Matt, but you can get somebody else on his team and maybe catch up with Matt on Monday when he's feeling a little bit better. Matt, good to see you, man. Take care. I'll see you next week.
Take care.
Discussions in the Intelligent Investment Show are for educational purposes only. The information presented should not be considered specific investment advice or a recommendation to take any particular course of action. Always consult with a financial professional regarding your personal situation before making investment or financial decisions. The views and opinions expressed are based on current economic and market conditions and are subject to change. There is no guarantee that any statements of future expectations will come to fruition. All investing involves risk, including the potential for loss of principal. Securities offered through United Planners Financial Services, member FINRA, SIPC. Advisory services offered through American Retirement Planning Group, ARPG and United Planners are independent companies. Garrett Lill and Wealth Partners are not affiliated with ARPG or United Planners. Any endorsement that I may have given during this recording, it is important to note that I am not a client of ARPG. The views expressed should not be considered representative in any way of my past, present, or future experience with Matt or ARPG. No incentives have been provided to me in connection with any endorsements I may have given on the Intelligent Investment Show. Investing involves risk, and there is no guarantee of any future results, performance, or success.